Hello everyone, welcome to my channel. I hope you are well, and today I'm going to be making a video on why I am buying more TKO shares. So this video is part of a bigger video which I will link here of 3 stocks I'm buying right now, but I've just broke this off into a separate video for people who are only interested in TKO. And if you don't know who they are a sports entertainment company, but their biggest brands underneath them are WWE and UFC. So let's jump straight into the video. However, before we get started, please remember that this is not financial advice and your capital is at risk when investing. Please make sure you do your own research and due diligence before investing in a stock, and be prepared to lose any money that you do invest. If you don't know what this is, it is a media company and they own WWE and UFC and many other promotions linked to the fighting and entertainment world. So it's quite a massive company. Over the last year, you can see the share price has risen by 55%. So a solid performance, and let's jump into why that is happening. Recent financial performance was very strong. They reported a revenue of $1.27 billion, which was a 4% increase from the year before, and it surpassed analyst expectations. They also reached a net income of $165 million, which was a massive turnaround from a net loss of $234 million in the same quarter last year. And their full guidance for 2025 is between $3 billion and $3.075 billion, which is up from a previous forecast. So they boosted the outlook. But if we look at the actual financial health of the company, over the last 5 years, the earnings per share has grew by 299%, and it does go up and down. It is more of a cyclical cycle. It is not a consumer staple, so that is expected, but overall it is grown. If we look at the actual financials of the company, we can see the revenue is grown over the last 5 years by 61%, and it is expected to keep growing. If operating income as well follows the same trend, so does net income. Earnings per share also follows the same trend as expected. The only thing that is declining is free cash flow, but that is because they have introduced a dividend, so that was probably the reason for that. So it'll be interesting to see how the stock holds up as they continue to pay out dividends and what the rate of dividend growth is. But if we look at their margins and percentages, as you can see, over the board, most things are increasing or have been steadily increasing over the last 5 to 10 years. The biggest point for me is their return on invested capital is sitting around 20%. That just highlights how strong of a business it is. You want to have your business to at least have 10% return on invested capital. That is a good sign. And then if we look at analyst expectations, so there is a downside if it performs really badly, but I believe it will sit between the medium and the high forecast for the next year. So we can see a possible return of up to 42% in the next 12 months. However, I think they will also benefit massively from their new Netflix deal, which they should see the effects of that in this next year. And that's around merch sales, ticket sales. I am a consumer, and tickets have gone up 80 to 100% in 2 years for the same sort of show. If you look at the pay-per-view events, have now got in-ring sponsors and a sponsor for every match, so they're increasing the streams of revenue. Since uploading the video, I also had a comment that was very good and very insightful, so I just want to share this with you now. So under my video, the Chill Melodist, so thank you for this, has said that the UFC's current broadcast rights with ESPN ends in December 2025, and WWE's broadcast rights with Peacock ends in March 2026. So both of these broadcast rights are up for grabs and will command a lot of value for a few reasons. Number one, sports media rights are in huge demand because streaming networks are trying to grow their subscribers through live sports. Also, live sports are the only thing keeping traditional networks alive, so sports rights have significantly appreciated in value over the last 5 years because of how competitive the market is. Secondly, at the current moment, there aren't many big sport leagues whose media rights are up for grabs until 2028. F1 racing is the only other sport that have media rights available for this year. So UFC in particular will command a big premium just purely because they're the only big player in the market this year with a sea of very hungry networks. So the same goes for WWE, but it's not getting as much attention. And this is different than the next Netflix deal. They are referring to the media rights for the US only, whereas Netflix has the rights for all international markets. So I just thought that was very interesting. I wanted to highlight that as well. They've also acquired other promotions. So the UFC are acquiring more MMA fighting companies, and they've even got a bull riding company now. The WWE aspect, they've been acquiring other promotions. So they've got AAA, which is a massive luchador promotion. So overall, they're expanding the financial health of the business. They're building up their entertainment portfolio by expanding into different promotions. And it's just an all-round healthy look for TKO Holdings. Now, the challenges might be is if they do end up getting too greedy and putting prices up too much, consumers may retaliate against that. But I think the product that's getting put out at the minute is justifying the price increases, so I think people are happy. But yeah, and that has been it. So them are all the reasons why I am investing in TKO, down from the business fundamentals up to the future of where the business can go. If you are investing in TKO, let me know what you think of the stock, whether you're going to buy more now or if you're going to wait for a drop, and subscribe for more videos like these. Leave a like if you have enjoyed, and I'll see you in the next one.